Tascha, fantastic to see you on Real Vision.
Glad to be here.
It's the first time you and I have actually chatted on camera, and you've got a unique perspective because you're both kind of a macroeconomist, and now you've gone down the rabbit hole. So these are always good conversations for me because that's my world too. Do you want to give a bit of background? I know you don't give away all of your background, but just a bit of background about yourself, how you got into the crypto space, and what attracted you from the macro space into this.
Sure. So I'm a macroeconomist, and I'm also a tech entrepreneur. I got my PhD in macroeconomics from Georgetown, and then I've worked for many years in the macroeconomic policy consulting space. I'm also a startup founder. I currently run a software company in the audio publishing space called Soundwise. So when I look at crypto, it's really from both of a macro perspective and from a, tech investment perspective. And so if you look at things from the synergy of these two crossovers, it's extremely interesting. So I would say I got into this space actually pretty late because, the Bitcoin side of things never interested in me.
Why not, out of interest?
Because I felt that was way overblown. I mean, a digital gold, an asset that has store value asset that's has better features than gold. Is that a big deal? Maybe to some people it is, but comparatively speaking, what got me really, really interested is once I started using DeFi. And then I realized this is so much more than what people made it out to be previously. At least that was my previous understanding.
So take me through a bit of that about, okay, how did you start discovering DeFi and what did you see in it suddenly?
How did it really start? I don't quite remember now exactly, but it's like when the DeFi summer started in 2020, and I probably heard some podcast or something, and just started playing around with MetaMask and with Uniswap, with some obviously you first everybody onboarded through some centralized exchange. I think it was a Coinbase or maybe Kraken. I don't remember, but it's the same. But I very quickly moved into the decentralized space and just realized I remember the first time I used a Uniswap or something, I was like for a few hours I lie down on my couch. I just stare at the ceiling for a few hours because that was it was so mind blown because it was quite unimaginable that exchanging financial assets could be so simple. So it was a big shock at the moment.
Why was it a shock to you? Because there was no middlemen; it was all done automated.
It was the ease and the non-fussness of it. Compared to what you would need to do to normally to buy equity or to trade commodities or to swap for another currency, fiat currency. It's just the degree of ease and the level of the reduction of cost is just amazing. And I mean, we can talk about what I think the ultimate advantage of DeFi is, but I think once you start using the product, it should be pretty self-explanatory, pretty obvious.
So you're a macro person, you see this. What happens to your macro framework when you suddenly realize the world has changed?
It certainly affected my asset allocation for sure. And I have a sizable portion of my net worth in crypto, and since that point on, I realized this is such a it's going to be a decades-long secular trend, and the train is not going to stop anytime soon. And we are just barely started with we're not even reached. We are still a bit. I would say maybe like 2-3 years away. Maybe that's even optimistic from 8 billion users in crypto. And I consider that to be an inflection point for mass adoption. And if we get to 1 billion users, I think we will start to see more of a consumer-oriented applications start to take off. Right now, it's more of a experimental stage, and people just trade assets, trade tokens like they are. They don't have any. They don't really generate any real economic values. Mostly the applications still, right? So, but I think once we get to a higher base level of users, and then we have a point. We reach a point where more consumer applications can be built.
Great.
But that's still a few years away, I think.
So we're going to dig in a bit to your crypto views, but I just want to get to your macro views right now. Feels that we might be headed towards a recession, whether the yield curve is telling us the right story. Love to hear your macro picture, and then we'll talk about how it might affect crypto as well. Sure.
So a few of the major cyclical, I would say cyclical factors that are going on, I think affecting risk assets and including crypto. We can argue, whether how much of a crypto it should be included in risk assets. If you're the core Bitcoin people, you say this is not a risk asset, but we can talk about that. But let's just say a few factors. Number one, obviously, everybody knows the Fed tightening cycle, right? We're just seeing the starting of that. And then number two, we got a high inflation. And right now, today is what? April 11th. Tomorrow, you're going to get the March inflation number. I think right now the consensus forecast is 8.5, 8.4. That would be the highest we see in decades, right? So you can argue whether that's going to slow down later this year. I think maybe because we get a higher base. But still, it's for this year at least, we're definitely not going to see 2. We're so far away from 2%. So that's squeezing everybody's purchasing power, right? On the retail side, that means you have less discretionary cash to allocate to asset purchases. You've got to cover your essentials first. On the institutional or the corporate side, you spend more on energy costs, you spend more on commodity costs. So that is going to squeeze everybody's liquidity. Thirdly, you see, even though the Fed officially, the rate tightening just started last month, but you've already observed quite a bit of tightening in in financial conditions, right? So you see real rates going up really fast. And then you also see the liquidity conditions start to roll over from, indicators. If you look at base money, look at the, corporate cash positions, you look at, money market funds, asset positions, all of them start to roll over. So it's not like a market is in a liquidity crunch. We're like far from that, but it's starting to, it's off peak. It's starting to decline. So that trend is going to continue in the short term. And then, you have obviously risk asset markets have reflected that. And then you see NASDAQ dropping 20% since the end of December to like March, some point in March. And then we rebounded a bit, but it's a pretty sizable drop, right? So. And that is affecting crypto because the two markets are still like very, very correlated with, you can call it portfolio rebalance or you can call it rotation, but there is same bunch of investors investing in these markets. So if equity will be the bigger side of the portfolio, if that part is down, if you try to rebalance your portfolio, it affects other smaller risk asset markets as well. And then you have dollar going up. I think DXY just hit 100 a few days ago, right? So you're in this kind of environment where inflation is going up, and everybody's, you see more and more central banks start tightening, but the U.S. Federal Reserve is at the forefront of this, and you see rates going up, and then that means that everybody's, when you need to repay your debt, you need to pay more in terms of dollar debt. And also, the rate differentials between U.S. and other countries start to reduce. So that will, increase the demand for dollars as well. So overall, I think in the short term, you see dollar strength. And that is negatively correlated with risk assets. And actually, a while ago, I posted on Twitter, if you look at the correlation between dollar and gold and commodities, and S&P, and NASDAQ, and Bitcoin and crypto, it's actually Bitcoin and crypto is most negatively correlated with the value of dollar. So that's another cyclical short-term headwind for the crypto market. So and also this is something more specific to crypto is what I call the recession in on-chain economies. So if you look at the activities of different layer 1 blockchains or layer 2 blockchains, whether it's Bitcoin, Ethereum, or the newer ones, Near, Avalanche, Solana, Arbitron, all these different chains, you look at the transaction levels and wallet growth, they all rolled over. So the Bitcoin and Ethereum hit the highest activity level in this cycle back in May. Since then, we had another peak in November, but that was a relatively smaller peak. Still, the highest level of activities we see.
Yeah, it wasn't confirmed by activity. It was price a new high, but not an activity, I think.
Yeah. So on one hand, you can argue, well, there is tremendous reflexivity in these markets. So when market going up, obviously people trade more and people are more enthusiastic to use the chains more, right? And the opposite is true too. So on one hand, you can say these, reduction of on-chain activities maybe is just a reflection of price actions.
The cryptoverse is an incredibly exciting place, and it's going to be absolutely massive. This has been just a small taste of my own personal journey into crypto. Join me for free over on realvision.com/crypto as we discover just what this new world will look like and much more.